What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is May 1st of 2020. Well, folks, I hope you all are having a fantastic day wherever you are. And in today's video, we've got a lot of things to discuss, from Bitcoin's price continuing to surge upward towards $9,400, correcting over the last couple of hours down to $8,800. However, all in all, holding the vast majority of its gains and looking like it might be going for more going into the halving event in mid-May. But outside of this as well, we've also got some really big developments in regards to the data science community for Bitcoin, as the famed stock-to-flow model has gotten a reiteration from its original creator, Plan B. It talks about comparing Bitcoin not only as an evolving asset over time, but also comparing it to gold and silver within the stock-to-flow model. So we're going to be diving into all this and more, especially as we go through our sponsored interview with Jackson from Caleb and Brown, where we dive deeper into this conversation of the new stock-to-flow model, as well as taking a look into what's happening in regard to OTC markets and institutional capital as we go through this major transformative shift between markets during all of the craziness with COVID. So we've got lots of things to discuss. Let's not push it off any longer and dive right into the video. So take a look across the board here for cryptocurrency markets. We can see the vast majority of cryptocurrencies are in a no-trend scenario right now between 1% to 2%. And again, this is just over the last 24 hours, but if we take a step back here, we can obviously see here over the last couple of days, guys, that cryptocurrency markets have been doing great. They've been phenomenally outpacing pretty much any market across the world, and we've started to really go vertical, as we talked about over the last few weeks, as we started to recover here. And a lot of people were talking about, oh, Bitcoin going down to 6,000 or 5,000, kind of earlier on before the halving event. Again, playing into the theory we had for a very long time here, that valuations were going to rise in anticipation of the halving event. Now, I think a lot of this actually has to do, as Jackson and I actually talk about in our interview later on, into the new evaluation of the stock-to-flow model. And it's a really interesting perspective, and I want to spend some time diving into it. But I want to spend a little bit of time taking a look at this price action, because we just reached our price target yesterday of around the upper $9,000 range, around $9,500. Now, again, I don't think we got exactly to $9,500, or a few dollars short there in that case. And again, that's always a point to most people out there. Again, never be as greedy, be a little less greedy than the other person in the sense of your expectations. Always have your levels a little bit lower than those big evens. But all in all here, guys, this is basically what we've been theorizing. It's been a lot faster than what I always thought about. I think the big mistake I always tend to make, and I think that a lot of people make in this space, is we don't anticipate how fast Bitcoin can move. It can make these very stark moves very quickly. But again, volume was really nice. It was one of my big complaints the other day as we started to make a higher move in price. But as we continued throughout the day, we really started to see here, and we can take a look at BLX, at the volume came in. This has been one of the biggest spot volume days since back here in late March. So this is really good to see here as we're continuing with the price. We're seeing matching volume here. And again, I want to see a continuation of this across exchanges. But all in all here, this is really good to see. We're seeing this confidence in price, and it looks like we're holding here, even though we had a little bit of a pullback here. It seems like prices are holding the vast majority of the gains, and they're looking like they want to recover and continue higher. You get a lot of these candles with tall wicks, where basically price eventually comes back on the next day. So in this case, I'm confident in what we're seeing. And I think, again, being realistic here, I think the only thing we need to look at here is our Bitstamp chart here. We've got, let me go ahead and pull it up here. Here we go, Bitcoin US dollar. So basically it's got to adjust the chart here. We got to go on logarithmic. Again, we've got a little bit of range that we could still see here going into May. And again, I think the highest level here is going to be somewhere in the upper $9,000 range to $10,000 at max. But I'm not calling for anything too dramatic right now. I think we've seen the vast majority of this rally here. I know some people are calling for a breakthrough and then having event above the line of resistance, where we would basically start to climb higher. And here's my only possibility, the only possible theory I have here in regards to that happening. We would have a continued rally here over the next week or so, where we would break up above 10,000, we'd break above these previous relative highs back here throughout 2019, and we would start our process of resting alongside the line of resistance here and continuing higher as we go into the next coming months. Okay, so it would be a multi-month process here, like we saw with gold, where prices rest along the line of resistance, make it support, and signify that we're not going down to lower levels, and we continue higher. Again, I don't want to go ahead and make that bet yet. I'm not going to try and make that call, but I will say here, I'm not really getting bearish on this until we start to see a day or two worth of downward price action. Again, you can set your stops. If you guys want to possibly try to make that trade where you think it's going to come down somewhere around 6,000 to 7,000 after the halving event, you can do that. Again, it depends on what kind of, are you an investor, are you a trader, are you just simply long-term holding? This is something we're going to talk about in our newsletter, where again, You really need to determine what you are as an individual. Are you a trader or investor in this market? Now, two other things I just want to talk about before we dive into the stock to flow model. Ethereum, as well as the broader altcoin market, looking like it's building into a wedge here for a breakout into the summer. Again, I always try to keep my estimates conservative. You guys know I'm exposed to altcoins, but we're in May right now. I'm going to be realistic with you. I don't think we're going to see a massive breakout. I also don't think we're going to see a massive sell-off in altcoins. But here's my point. You can see here between Ethereum, one of the largest cryptocurrencies, and also if we take a look at Bitcoin or altcoin dominance in this case, that we're building a general wedge of higher lows and lower highs. And again, I think this is going to build into a technical pattern that's going to help set us up into breaking out of the longer term wedge and really spawning the next cycle for assets like Ethereum and other cryptocurrencies other than Bitcoin. So again, after the 90% correction, we can see here we got the double bottom here on the weekly chart, and now we're building into the technical pattern to really signify that we're ready for higher moves. So I thought I'd just toss that in there, show you guys. Again, you won't get this looking at the hourly chart. Again, the thing I always emphasize, look at the daily, the weekly, and the monthly. Those are the time frames you guys should be focusing on. The vast majority of people should be focusing on, whatever your trading style is. All right. So let's go ahead and talk a little bit about this new stock to flow model that Plan B has put together. And again, if you guys haven't already, you guys should go follow Plan B on Twitter and stuff. It's a really interesting character and stuff. I have some individuals I know who have worked in the data science community who know about Plan B, and they share their data science models. They're really interesting, awesome guys who are just always contributing to the space. So let's just go ahead and talk a little bit about the current stock to flow model that existed beforehand. So the stock to flow model originally that was created by Plan B, and then it's been kind of modeled, it's been modified a little bit as time progresses. It basically showcases here how Bitcoin over time, as we start to go through these adjusted periods where we have the halving event come through every about 4 years in crypto markets, how we see price correlate in kind of a waxing and waning, or kind of peak and trough around this general fair value range for the stock to flow model. And we can see as time progresses, as we go through these halving events, whether it's a little bit beforehand or a little bit afterwards, we see price resurge to new highs, right? So this is the current stock to flow model, and it's played a lot of relevancy. It's probably one of the very few models, and I just want to emphasize the significance, and congrats to Plan B on this. It's been one of the most valuable models here, taking in one of the most fundamental aspects of Bitcoin that actual institutional investors care about. If we're talking about people who are deploying tens, if not hundreds of millions of dollars, if not billions of dollars of capital to the cryptocurrency space, this is the model they care about, okay? So it holds a lot of relevancy. And when Plan B put this new model together that we're going to be talking about, it probably plays a very big role into why we're seeing a lot of confidence coming to cryptocurrency markets. It really puts it into an interesting perspective. Now, in this model, we're simply just taking a look at Bitcoin evolving in the sense of its price over time throughout the halving events. And it's a great model, but it doesn't really help us see Bitcoin as a broader asset in the world. And it also doesn't tell us the story about how Bitcoin as an asset has evolved. A lot of people, including Plan B, hold a very solid theory that as time progresses, Bitcoin has become a changing asset even over the last decade. The perspective of what Bitcoin is has changed a lot in this short period of time. And he talks about this through the term of phase transitions. So this basically talks about how, he kind of used the example here of how, for example, water can go from a solid to a liquid to a gas to ionized in this case, right? So again, the different states of matter, right? He uses this as an analogy, but he talks about how assets can do the exact same thing, how they can evolve over time. And he kind of demonstrates this here through the BTC narrative that people have talked about. This is an actual interesting kind of study here showing back in 2018 how from 2009, Bitcoin had really gone from being known from the vast majority of people from an eCash proof of concept, right? The people who were involved in this had known about a lot of the original eCash projects that were created by a variety of people in the cryptocurrency space that currently work in crypto. Again, you have a lot of different people, Nick Szabo, you have people like David Chom and stuff who have been kind of from the early days here in the eCash revolution. Now, going into a vast majority of people, almost a similar amount, either thinking Bitcoin is a censorship-resistant e-gold in 2018 or an uncorrelated financial asset. So a big change there in the sense of perspective, and you can see here how the general market that's making up the investors and the traders are starting to take on a different perspective. So this is a very important thing to keep in mind when we talk about building a better stock to flow model, building one that is actually going to account for these changes, but also, again, compare it as well to different assets. So again, the original stock to flow model here, right, taking into account Bitcoin's valuation. Again, this is taking in market value in this case over time. And notice as well when we take a look here, right, there's again these two emphasized points here of an evolution of an asset and comparing it to gold and silver. Notice how, as we take a look at the price plots here, it seems like there are these little clusters, right? So we're starting to see this again, this basically point chart here, where we can see different clusters of valuations. And again, this is, as we're taking a look at a logarithmic chart, the differences in the halving events, but also in these kind of seismic shifts in what Bitcoin really is as an asset. So let's go ahead and take a look at the final chart here, right? This is for the Bitcoin side. We don't have we'll look at the final version in a second. This is the Bitcoin clusters that we have here. Again, these kind of rough estimates where we have these different categories. Proof of concept was the first wave, the second being payments, the third one being e-gold, and fourth, a financial asset, an uncorrelated financial asset for people to be able to hedge against central bank monetary policy and world events. And now we've got the final model here. Again, keeping in mind the stock to flow at the bottom here, right? This isn't really evaluating against time here. It's taking in the market valuation to the stock to flow. A very interesting change. Again, the original model was looking at over time, right? We started to see market valuations rise in this case as the stock to flow was increasing. It was a different perspective. This is now taking a look at a linear line here and really showcases how the stock to flow shows a ton of relevancy. That's a pretty consecutive trend here, guys. If you take a look at these general plots, the averages between each 4-year halving event here, the market valuation here, and you can see how silver and gold play along those lines. Gold and silver themselves have very different stock to flows. Silver is much more well produced. It's used in a lot of industrial use cases comparative to gold. And because of this, right, we have a much larger supply of silver, and that's why it's a much less valuable asset comparative to gold. The same plays true here for Bitcoin. Bitcoin right now is around $130, $140 billion asset. We can actually probably get the official figure here right now, 162, because we have actually technically had some increase in price. But $162 billion is nothing compared to the over $10 trillion or more in value locked in gold markets. And there's a reason for that, because the stock to flow is not more optimal than gold yet. We're getting there, and the next 4-year halving event will be there. We'll be at a better inflation rate in this case compared to gold, meaning that the new issuance of supply, aka the stock to flow model. And the stock to flow model, again, is a measure in this case how many years in this case it's going to take for us to get back to the current existing supply in this case, right? To basically to double the current existing supply. And we're not there yet, but we're getting there. Gold at the moment is the best stock to flow model. And when we go through this next phase for Bitcoin, the next halving of it, it's going to leap us further onto this line. It's going to lead us to higher valuations. And probably test along the lines of, something above, probably above silver in this case, right? But then when we get to gold, that's going to be the interesting catch. Can in the next 4-year cycle, can we pass gold? Can we have and maintain a better stock to flow model? Will it work for Bitcoin with miners receiving such a smaller reward? And what will the valuation be? I think that's the interesting question here. But again, the takeaways here from the article, and I recommend you guys dive through this. We'll talk a little bit about this with Jackson later on, and I think it provides a really interesting perspective to it. All in all here, the conclusion reads in this case, so I want to go ahead and just take this time to read through this. In the article, Plan B solidifies the basis of the current stock to flow model by removing time and adding other assets, silver and gold, to the model. He calls this new model the BTC S2F model, cross asset model, the S2FX model. The S2FX model enables valuation of different assets like silver, gold, and Bitcoin with one formula. Plan B has explained the concept of phase transitions. Phase transitions introducing a new way to think about Bitcoin as an evolving asset, about Bitcoin and the stock to flow model. It's led to the creation of this existing model. The S2FX model formula has a perfect fit for data, 99.7 R2. In this case, again, showcasing the consistency in this case of the data over time when comparing it to other cross assets like gold and silver. The S2FX model estimates a market value of the next BTC phase or cluster, BTC S2F, will be about 56 in 2020 to 2024. So this is going to be the new model. It will take 56 years, in this case, of the current creation pattern for Bitcoin to duplicate supply. Now, it's never going to do that, but again, it's showcasing that the current existing inflation rate would take 56 years, in this case, of 5.5 trillion. Let's translate into a Bitcoin price, given 19 million Bitcoin, of $288,000. So he's saying in this time period that we would get up to a valuation of 5.5 trillion. Now, again, I've emphasized, again, having much more conservative estimations, but this is, of course, according to the current model that we have. And this is rooted in data science, which makes me sometimes doubt a little bit of my own kind of conservative skepticism on where Bitcoin's price could go. But the one thing that makes me think that this could be possible, that a $288,000 Bitcoin could happen, is a few reasons. One, many of us thought 10K was the top, and easily within a couple of days, Bitcoin went to 20,000, doubling valuations from our current estimations that we had back in 2017. Bitcoin can go crazy. Bitcoin doesn't give a damn, right? But along with that as well, we're talking about a very interesting macro environment surrounding this halving event. Bitcoin right now is one of the only assets that is up year to year in this case, or is outperforming other assets to no avail, right? There might be other markets, equities might be up and stuff after countless amounts of central bank monetary policy. But Bitcoin is still leading the way. Now, I want to go ahead and dive into this conversation with Jackson that we have, the sponsored interview with Caleb and Brown, because we really talk a lot about what's going on in the macro environment, how much is at stake in regards to the liquidity that is going to be moving outside of traditional markets that might possibly come into crypto markets and justify this $5.5 trillion estimated valuation that Plan B is pointing to in its data science model. All right, so let's go ahead and dive into the conversation with Jackson from Caleb and Brown. Alrighty, everyone. So in today's sponsored interview, I'm sitting down with Jackson from Caleb and Brown, who's one of my good friends out in Australia. We've not only had many conversations beforehand in person, but we also like to do these videos from time to time here on the channel where we get some perspective into the OTC market and what Jackson's been seeing across the industry. So Jackson, thank you, man, for making the time. It's great to catch up with you, especially during all this craziness that's going on in the world right now.
Thanks for having me again. It's always great to be on the show, Nick.
Absolutely, man. It's a pleasure to have you on. So I wanted to go ahead and start off, man, because I know you guys are working with a lot of institutional capital, a lot of inflows into the OTC markets. And I think with COVID-19, we've seen a massive shift in the perspective of where people are allocating capital. I've seen that in the traditional venture capital space. I've seen it not only in the broader crypto market, but also in asset markets like equities. So I'm curious to get from you, as someone who's kind of working in that industry, from kind of a bird's eye view, what kind of trends are you seeing right now in kind of a post-COVID-19 environment?
Yeah, so if we want to think about what's going to happen post-COVID-19, we need to look at the situation in its entirety. And firstly, we've got right now a giant hole in incomes and balance sheets. Ray Dalio from Bridgewater Associates estimates that to be $20 trillion. So basically, you're going to have central banks deploying stimulus packages roughly within the vicinity of $20 trillion in order to fill these holes. So that's a guarantee of the value of money going down, which means all asset managers worth a dime are now reassessing their strategies, because with bonds, you've suddenly become an investment that's returning increasingly worthless pieces of paper. So that's over $100 trillion market getting reassessed. Equities are definitely getting reassessed, right? Because companies are going under, and now everyone needs to reassess, okay, which of the companies that are going to survive through this? Until now, Bitcoin has existed in kind of a zero-sum game for the last 2 years, right? The last time we had new participants into the market, that was 2017, when we had a lot of media frenzy and a lot of new people coming into the market. Since 2018 to 2019, the start of this year, it's basically been the same players in the space, right? There hasn't been that much new growth in new participants, which means it's a zero-sum game. So every winner, there's a loser. But now we're in a situation where all of these traditional investors, which previously are in other asset classes, now have the opportunity to look at Bitcoin as a solution. Previously, they only look at Bitcoin as an alternative, right? Because they have an existing functional strategy. So they don't need to assess Bitcoin as something that they need, right? They only look at it as a alternative investment that may produce some outperformance. However, now every asset manager is now thinking, okay, I've got a problem here and I need to solve it. And what are the tools at my disposal? And Bitcoin is shaping up very nicely to be a potential option for every investor in the world.
Absolutely, man. Taking a step back to your point, Jax, I think you culminated it pretty well. And this is something that I've tried to emphasize a lot in regards to the kind of cash shortage that we've seen across the world and how this has set up the perfect environment for Bitcoin. You were talking about equities, for example. Companies and their stocks have been able to rise as much as they have over the last decade, especially I know in U.S. markets because of solid corporate earnings and therefore buyback programs into their own stock, nice paying dividends, and that's kept up equity markets for a very long time. We are not going to see those same kind of buyback programs or same kind of dividends or same kind of corporate earnings for a very long time. You mentioned the bond market as well. As you mentioned, around $100 trillion market if you take U.S. treasuries and other government bonds from the EU to Asia. And you got this issue now where you've kind of got two problems here. You've got negative interest rates, in this case, therefore pushing bond yields into negative territory where the holder's already being penalized to some degree. And you can have some price appreciation, but as you mentioned, a lot of that appreciation is going to be in fundamental basis devalued by the excessive printing to the tune of $20 trillion between the Fed, the ECB, the Bank of Japan. And now we have this asset like Bitcoin that sure doesn't yield you anything, but it can't be printed into oblivion and it doesn't penalize you for holding it. And it's completely out of the whim of these central banks and these kind of correlated markets that have to deal with central bank monetary policy and government fiscal policy. And do you guys see in this case that there's a kind of a new wave of investors coming that see Bitcoin as this kind of potential store of value to hedge towards?
Yeah, absolutely. So that's what we were getting at because Bitcoin has Bitcoin's 10 years old, which means the entirety of its life it has only existed within a macro bull market, and it was designed to be a hedge against the financial existing system. So now we are in a position where there are people who previously were not considering Bitcoin now forced to consider it. And I guess we'll see this through Google Trend Analytics. And perhaps if you have an increase of new viewers, for us, we're certainly seeing not a dramatic, but definitely a significant increase in new signups to our business that are first-time crypto investors.
Mm-hmm. Yeah, the thing
and I think that trend is I think that trend is going to continue to grow because we've just had Andreessen Horowitz Fund announce that they've beaten out their raise target of $450 million, and they've just created a new fund for $515 million. And there are a number of funds across the world that are saying there's a lot more investor interest.
Absolutely, man. Yeah, just to your comment earlier and stuff, it's a bit difficult for me as a YouTuber to see whether or not we get new users and stuff in the space, but we've definitely seen a bump up in the view count. Subscriber count's gone up a little bit as well, so it means a little bit of new users coming in. And as you mentioned, you've got all these massive VC funds that are now stepping back in and starting to raise huge rounds and now starting to set allocated amounts of capital. I mean, you saw Andreessen come out with a very big piece that they wrote a while back and stuff talking about it's time to innovate. It's time to, kind of look at the current situation that we're in right now where people aren't able to get money when they need it. The companies can't get loans when they need it. Individuals here in the U.S., one of the richest countries in the world and stuff, we can't get money out to people when they need it. So it shows that the payment rails and the networks we're using right now are flawed. But I think, again, it goes much deeper to that, Jackson, again, not only just in the sense of the chance for a lot of innovative sectors within the cryptocurrency space, but also just that simple store value argument where, again, even though as many people have kind of debated about, I think a lot of people view store value as something that holds your wealth at exactly the same valuation you put into it. But my opinion is, at the end of the day, I think as some other people, that it's supposed to be serving as a hedge in this case, where at the vast majority of times when you enter into it, you can either get your money back or in this case, you can get a larger return for your money back that is hedged against the policies of central banks and things of the like that. But I think you're very right. I think we're stepping in this time where Bitcoin, for the first time, is actually living through a recession and what might become a depression if this stagnation kind of continues, if we don't see the same kind of growth bounce back and that kind of V-shaped recovery.
Yeah, absolutely. We are seeing a small recovery in the traditional markets at the moment, which is quite strange, right? Because we're seeing unemployment numbers go through the roof, but somehow the stock market has made a nice V-shaped recovery. That's true for the US. That's also kind of true for the Australian stock market. But in reality, it's uncertainty, and I believe it's actually devaluation of money to some degree. When you have printing of money, you're expecting inflation, right? So you're expecting the price of goods and services to go up. But because we're in a lockdown situation where everyone's sitting at home, I'm not spending on goods, I'm not spending on services, I'm not going to restaurants. So the real economy is not actually receiving any of that stimulus money. So at the end of the day, the people receiving the stimulus checks, their expenses have gone down, right? If you're lucky enough to have the same income, your expenses have gone down, and now suddenly you have additional capital that you can allocate to the financial markets. Right. And that could have something to do with this, what I believe to be a temporary V-shaped recovery. But this, most macro economists are comparing this to the 1930s Great Depression rather than the 2008 financial crisis, where we had a relatively quick recovery from.
Yeah, absolutely. To build on that, Jackson, I think what you're going to see here is, as I kind of talked a little bit about earlier, you'll see that kind of bump, that recovery in GDP. You'll see some people going back to work, the total kind of like long-lasting unemployment starting to decline. But I think that you're going to remain over double-digit territory here in the U.S. and a lot of other countries across the world for a very long period of time. And that's going to have a dent, I think. Eventually, it'll have a dent possibly on financial markets, but above all on the real-world economy. And the sad thing is that central bank monetary policy taking this next step into negative interest rates, infinite QE, as the U.S. and Japan has already quoted, in a literal sense, they're really going to print as much as required. You're going to see that the average American, or the average participant in this case, even Australia, who has a few $1,000s in their savings, that they're going to start being penalized for owning those dollars in their savings account, that they're going to start seeing a lot less purchasing power. And again, I think this is where Bitcoin comes in as a very healthy new asset during this time, where people can, if they choose to, get some exposure to this new asset class. And I'm happy to hear that you guys see that kind of new wave of participants coming, because I mean, what we saw in 2017, I think, isn't going to even compare to what we see this time around. Maybe not in the sense of percentage gains, but in the sense of the scale of the run-up and the amount of people this market starts to get interested.
Yeah, absolutely. In terms of replicating the percentage gains, it's a lot harder because now we're a lot larger market cap.
Mm-hmm.
However, I definitely think in terms of number of participants entering the space, that's going to be kind of dramatically different from what we saw 3 years ago.
Absolutely.
Yes. The other thing is we're timing this quite perfectly with the halving event, and with institutional money. There's kind of two models that they respect more for Bitcoin, right? Because they don't like to look at technical analysis. So the first is the Sharpe ratio, which is your average annual returns divided by the maximum annual loss asset class can face. And when everybody's reassessing their portfolios, you're going to have gold at 0.2, S&P 500 roughly around the same. Treasury bonds look a bit better, and they have somewhere about 0.8. But Bitcoin is right now completely off the charts with a 2.4% Sharpe ratio. Usually you never see this, so I find it very difficult or I imagine it would be very difficult for asset managers to ignore this asset class. The other model that they respect, which is quite new for Bitcoin, is the stock to flow model. And that was kind of, we've just crossed the 1 year birthday for the stock to flow model being kind of publicly assessed. And Plan B has actually recently upgraded. Plan B is the writer, the first person who applied the stock to flow model to Bitcoin. He's recently reassessed that situation and determined that Bitcoin has evolved through its lifespan, and basically it started off as a proof of concept and therefore had a $1 million market cap, because that's what a proof of concept is worth. Then it kind of evolved, the narrative evolved around, okay, we're going to use Bitcoin for payments. Therefore, it had something around like a $60 million market cap. And then the narrative changed as new technologies emerge and we discover, okay, Bitcoin's a bit slower, but that's fine. We're going to use it as digital gold, right? And now that suddenly has a store of value narrative, and therefore it's got another higher market cap. And as the narrative changes, he believes that we're dealing with an entirely different asset each time. And what that's enabled him to do is plot out the stock to flow model as a comparison against other asset classes. So he's now comparing Bitcoin as a proof of concept with Bitcoin as a digital gold, with Bitcoin as a financial asset versus silver and gold. And what's been fantastic about that, where previously the stock to flow model only describes it only projects the price as an extrapolation out of time. So it's saying, okay, we have this current stock to flow model. Therefore, as the flow decreases, we should see a higher price. Now he's using interpolation because he's able to use the stock to flow model of silver and gold to compare with Bitcoin. Because right now, it takes a lot longer to create, to replicate the stock of gold, and same with silver. So therefore, it's got a higher market cap than Bitcoin. Now, using that, he's basically increased the data set. So he's now projecting the price of Bitcoin using interpolation rather than extrapolation. A simplified way to assess this is kind of like saying, okay, I've got some watches, right? On the high end, I've got a Protector Leap that's worth $100,000, and then I've got a Casio, which is worth $100. Somewhere in the middle, you've got an Omega, which is worth a few $1,000s, and you can kind of reliably assess the value of that watch based on the high end and the low end of your data set. Whereas, so now we've got kind of Bitcoin as a proof of concept on the low end, gold on the high end, and now we're able to predict a more reliable projection for the Bitcoin price using the stock to flow cross-asset model.
I like it, man. It's an interesting kind of approach and stuff because, again, I think there hadn't been any major significant changes to the stock to flow model for quite some time. I think around 2017 was really starting to get picked up. There's been a lot of people watching it for some time, but I think Plan B evolving into this kind of comparison to different assets, in this case especially gold, is going to give us a lot more perspective into the kind of the relevancy in this case to the halving, not only to the halving but also into the stock to flow in this case. So I'm interested to see. I'll probably put up a chart so you guys can see it in this case, just to kind of demonstrate the difference from the chart that you all probably already seen. But Jackson, have you seen basically anyone take more of a liking to Bitcoin now with this evolution in the stock to flow model? Do you think this kind of new adjustment is probably much better than the original model we had before?
It's quite hard to say. I can definitely say that there is a lot of talk around this model in the fund management space. It's like you said, it's rare that we get new things to talk about because it is such a new asset class and there's very little data. So when there's something new and exciting like this, it kind of circulates a lot, and I think it might have something to do with the price action over the last couple of days, because the Medium post did come out April 28th, and then a day later we have a nice rally on Bitcoin. So that I believe has something to do with it. But I think the only thing we can say is there's consistent growth in the narrative around Bitcoin and the institutional acceptance of it as a acceptable financial asset. It's now a mature asset that isn't just a uncertain kind of new piece of technology.
Absolutely. I think it's going much more from a speculative phase to becoming a maturing asset. And I think the moment, one thing I always bring people back to and stuff, for me, the thing that got me back into really wanting to learn about Bitcoin ever since I first heard about it in 2011 was when in 2016, it came back to its all-time highs when it went back to 1100. And for me, that was the kind of moment where I was like, okay, I need to look into this, and I needed to really understand it. And I think you're going to have that exact same reaction when Bitcoin gets back above to 20,000. Of course, for us, if we're in the space right now, we know about the anticipation of this, we know about the fundamentals. But I think, I'd be curious to get your opinion on it, Jackson. Would you agree with me that when we get to that point of 20,000, I think, as you mentioned, people are going to start looking at the models, they're going to start looking at the fundamentals of Bitcoin, and really start to consider this as an asset that goes in people's portfolios, especially as we'd be approaching shortly thereafter, if we start going to 50, 60, 70, 80,000 for Bitcoin, or up to 100,000, we'd be well over $1 trillion market cap.
Yeah, absolutely. Because what happens as well is when you have an all-time high, the environment you're in is actually every purchaser who currently owns the asset is in profit. So they don't have sell pressure. They don't have panic sell pressure, basically. So any additional limit orders that get placed above there are from people who would like to incrementally capture profits, right? Mm-hmm. Bitcoin is increasingly being viewed as a store of value, and therefore it's not, while it is used that way, it will be decreasing in the amount of people who try to trade it for short-term profits.
Absolutely, yeah. To keep that in mind and stuff, yeah, you're talking about more of the liquidity, in this case, having a long-term focus rather than what would be kind of short-term trading. And I think that's, again, what happens with most markets is you get a maturing. As valuations rise, your percentage returns per cycle usually go down, but there's a lot less volatility that follows. That's one thing we're writing about in our newsletter for the channel and stuff. I talked basically about, declining volatility usually means declining returns as markets mature. And this will be really interesting to see. I completely agree with you, Jackson. I think you're going to see this kind of trend of more people focusing on the long term, more people focusing and understanding some of the fundamentals of the supply schedule. Because the thing I keep emphasizing, I know a lot of people talk about the halving being priced in, but it's the reason, why back in, for example, the first or second halving of it, Bitcoin wasn't at $1 million, is because most people don't understand what Bitcoin is, and they sure as hell don't understand what's going on with the halving model and the stock to flow model that we have. So I think, again, if we're here right now, we're on the cutting edge of a lot of interesting stuff. But I want to go ahead and just kind of ask you, in this case, Jackson, a lot of people might be looking to make that kind of first position. They might be interested in getting some exposure to the space. How do they go about, doing an OTC order, and how do they really know that OTC is right for them?
Yeah. So the great thing about Caleb and Brown is that every single investor gets to get on the phone and speak to their personal broker and have a conversation with them and ask them all the questions that they need to ask. That is the fundamental difference in our service than an exchange where you'll need to execute those orders yourself. You'll need to kind of go through that learning curve on your own. We're here to guide every single investor right along that process and help them out with any questions, any technical difficulties, as well as help them set up with a strategy and make sure that they follow through with their own strategy. One of the things that investors are very prone to is FOMO, and right, it's the rational thing to do to buy low and sell high. However, it's very uncomfortable buying into the price when it's dropping, right?
Right.
So we'll sit down with the customer, we'll understand their needs, understand their plan, and then we follow up with them and we make sure that every step of the way they're going about this with the original strategy that they set in place. Awesome. And then another benefit is that we treat you as a business relationship. So we're able to provide you with all the benefits that kind of the larger players get to receive. Is we're able to let you enter the market before we receive the funds if you provide a proof of payment. So then that way, on a really volatile day, you're able to benefit from the volatility by capturing a low price and skipping that 1 to 3 business day that it takes for banking funds to clear.
It's awesome, man. So in this case, you're able to have someone on the line, which I've never had with an exchange, and along with that as well, you're able to lock in prices and not have to worry about the long wait times with bank transfers. Jackson, that seems really exciting, man. I'm glad you could provide some of those kind of details. And for those of you out there who are interested, feel free to check out the link down below in the description if you guys are interested in exploring OTC services with Caleb and Brown. I've known the guys for a very long time, and just I think from the conversation we've had, Jackson, I mean, there's so many interesting components and things going on at the moment. I mean, this has been the macro environment that a lot of us in the crypto space have been not so much waiting for. I don't really live for this world. I don't want to see some of the disaster that's going on right now, and then also to match with that, the economic kind of mess that we're getting ourselves into with central bank policy. But it's going to be very interesting to see how this all plays out over the next coming months, and how crypto over the next couple of years, I think, starts to really play a role as a major world asset in this. So I got to say thank you, man, for coming on and kind of joining in this conversation. It's been awesome to get some of your insight into the market. And if you guys are interested, please, like I said, go check out the link down below. Go learn more about Jackson and the team. A great group of guys and stuff. And we'll see you hopefully sometime soon in another video, Jackson. Thanks for coming on, man.
Thanks for having me, Nick. It's always been great.